In today's discussion about SoFi, I'll provide an overview of the latest developments, what the shorts have been doing, and other relevant insights you need to know. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's get right into it. SoFi recently experienced a slight pullback of 1.47%. This wasn't entirely unexpected, as the stock had been performing well for some time, and a bit of a pullback seemed inevitable. At the same time, the broader financial sector was booming, with several companies posting impressive earnings. For example, Morgan Stanley saw a significant increase, rising by 6.5% and reaching a high of $121.13. So while SoFi had a somewhat strange day, the finance sector as a whole was doing well. Leading up to today, shorts had been returning, but they made a quick reversal, although SoFi did pull back slightly. Trading volume was strong, with 47.6 million shares changing hands compared to the average of 44.9 million. This indicates that even though the stock pulled back, there was still a lot of attention from large investors. In fact, there were several notable transactions in the secondary market with values exceeding $100,000. Among these, there were significant trades like one for 1.3 million shares and another for 14.8 million shares. However, toward the market close, we saw some institutional selling. It's unclear why this occurred, but it created an interesting situation. For long-time SoFi investors, this probably isn't surprising, as the stock has often faced manipulation in the market. In other news, SoFi made a significant announcement this morning. The company will be adopting Galileo's Cyberbank core for its new commercial payment services sponsor banking program. Galileo is an integral part of SoFi's business model, and this move is expected to reduce risk and further enhance SoFi's long-term prospects. Today's announcement also highlights just how beneficial Galileo is to SoFi, especially as the company continues to grow. For SoFi, this development fills a gap that was somewhat evident in their last earnings report, and it positions them well for the future. Turning to broader economic data, today's export numbers came in higher than expected, signaling that the economy remains relatively strong. However, shorts continued to increase their positions, with an additional 611,000 shares being shorted today. In total, 16.79% of the free float, or approximately 175.59 million shares, is currently being shorted. It's interesting to note that despite the financial sector closing up 1.34%, short positions in SoFi still increased. This kind of movement can sometimes be perplexing, especially when the overall market is performing well. It's worth mentioning that SoFi has often been the target of analysts' ratings that seem lower than warranted. For instance, some analysts have maintained low ratings on the stock, which may contribute to the challenges it faces. One notable example is an analyst named David, who hasn't updated his rating for over 2 months. He might be waiting until SoFi's next earnings report to reaffirm his $4 target. On the other hand, Morgan Stanley, which had very strong earnings recently, provided SoFi with a more favorable rating. However, even that rating wasn't as high as you might expect, given SoFi's potential. This contrast between analyst ratings and the company's actual performance is intriguing and could be tied to market manipulation. Despite these challenges, SoFi's long-term potential remains promising, especially with the integration of Galileo and other developments in their business model. As the company continues to grow and adapt, investors will likely have plenty to look forward to in the coming months. Now let's turn our attention to the options market. Today we saw a fair amount of activity, with about 15 million in call options and 3.81 million in put options. While these aren't record-breaking numbers compared to previous days, they still represent significant interest in the stock. Interestingly, 55% of the options activity today was bearish. However, there's still optimism in the market, as many of the call options are priced with the expectation that SoFi stock will stay above $11. On the flip side, some of the put options suggest that the stock could fall below $9 this week or around 90.50s next week. This reflects the mixed sentiment around SoFi, with some investors expecting further gains, while others are more cautious. As for open interest in options, there are notable levels at various strike prices. At the $8 strike, there are 24,000 open contracts, 12,000 at $8.50, and 24,000 at $9. However, the most significant levels to watch are at $10.20 and $10.50, with 30,000 and 23,000 open contracts respectively. If SoFi manages to close above $11 by the end of the week, it could trigger a significant number of in-the-money options. This would likely create a ripple effect in the market, as market makers would need to cover these positions. This is one reason why shorts might be increasing their positions early in the week. By doing so, they may be trying to dampen the stock's momentum before the options expire on Friday. If that's the case, we could see an uptick in shorting over the next few days. Looking ahead, the key economic data points to watch are the retail sales figures and initial jobless claims, which will be released in the coming days. Beyond that, most market movement will likely be driven by corporate earnings and the guidance companies provide for the future. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.